Egypt's finance ministry has announced a new debt control strategy. Basically, it's a 4-year plan that aims to cut the country's public debt levels, which currently stand at over 100% of GDP. CGTN's Yasser Hakim has the details.
Coming out of 2 uprisings and terrorism that have crippled the economy, the government resorted to a process of borrowing to rebuild its economy and provide funds for public services. Public debt has reached 102% of GDP, and international debt 92% of GDP. A plan is in place to reduce the mushrooming debt.
The target is to reduce the public and external debt to 80% and to reschedule the debt repayment plan. It was short-term payments before, which puts pressure on the government to pay loans every 3 to 6 months. The government is now issuing long-term bonds, 3 years, 5 years and 10 years.
The debt control strategy is a 4-year plan, working on several levels simultaneously.
The way that they are formulating moving forward with the strategic plan is to put together some reform mechanisms. One major concept is the inclusion of the informal market with the formal market, and that on its own should have quite an impact of about $10 billion into the economy if that is able to be implemented. A lot of other tax measures have been undertaken as well, started to remove subsidies of the energy, subsidies of transportation, other food products. There has to be manufacturing, there has to be exports, there has to be new investments coming into the economy for us to be able to create these jobs that we need for us to be able to reduce the public debt.
But there are challenges along the way.
There are 2 other parts of this equation, variables that need to be looked at, and that is the impact of international markets such as the oil and gas market. Any increases, as we saw last year in the oil prices, has a major impact on both the public debt and the external debt. The other thing is, of course, the currency fluctuations, since Egypt has floated its pound, and hence that can be an impact as well on both public and external debt.
Most experts say the success of such program will benefit the predominantly poor population.
The money saved will be spent on health services, education and infrastructure projects. This will also lift the pressure of public debt and reduce loans from local banks that attract high interest rates. Reducing debt will also relieve the financial burden of future generations.
Experts say the public debt is high, but not at dangerous levels. However, the government insists to begin its 4-year debt control strategy before loans reach a very high level that is unattainable or difficult to repay. Yes, Hakim for CGTN, Cairo.